You need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're always glad to have this returning guest. She's extremely popular with our viewers. Lynnette Zang is the Chief Market Analyst at ITM Trading. Lynnette, thank you for joining us here again on Reluctant Preppers.
Well done again. It's always fun to be here, so thank you so much for having me.
I really wanted to get you back on again. We've been looking at some bewildering mashups of reality versus unreality in the news versus the financial indicators. Just today, I got notice 20 major retailers have filed for or are likely to file for bankruptcy in 2018, including Sears Roebuck, JCPenney, Brookstone, Mattress Firm, and a number of others. Also, CNBC reports today that mortgage fraud is getting worse. They show a 12% increase in falsification of people's incomes on their mortgage. 22% of that is due to using internet online techniques to falsify their income. CNBC also reported today that Alan Greenspan, former Fed chairman, said, quote, "We are in a bond market bubble," unquote. So in the face of all this, I get my stock ticker, look at it, and the Dow Jones Industrial Average pressing up just to record levels again. The market's once again in melt-up. We talked about this phenomenon almost a year ago about the markets being in melt-up, but this is just striking the dichotomy and the contrast between these reality stories that are saying things are terrible and getting worse versus the market's just blithely, going through the roof. And if you recently had a publication of your own just before the crash, some patterns to watch for. So could we zero in on that today? Because It's giving us really bad gut feelings of what's going on here.
Well, first of all, let's start with the Alan Greenspan comment, because it isn't just that we're in a bond bubble. We've been in a bond bubble for 30 years as they've taken interest rates from over 20% down to 0. And so when interest rates drop, then the principal of the bond goes up. And then when they issue new bonds and new debt with a lower interest rate, that, of course, means that you're going to pay more for that bond because you're getting paid less interest. So it isn't just that we are in the bond bubble. In reality, it started to pop in July. I think the exact bottom was July 5th. Of 2016.
And as long as we're talking about dates, I should interrupt, and I should have said this earlier. Today is Wednesday, okay. October 3rd, 2018. Just had to get that in. So back to the bond bubble hitting a bottom. Go ahead. No
worries. But yeah, we hit the low, and it started to burst really in July 2016. And interest rates on the shortest term debt have gone up over 500% since then. But all of the bonds, whether they're the shorter term or the longer term, they all bottomed in 2016. So that means that all of those bonds that have not matured, but were purchased in that vicinity, like think pension plans and retirement plans, because that's really who's been sucking up a lot of the bonds, because they had to transfer that risk to the general public from the few. I mean, we're already inside of a bursting bubble. Now, if we're inside of a bursting bubble, and the excuse that they gave before was with interest rates so low that the dividends on the stocks were paying more than the interest on the bonds, and that supported a higher stock market. Now, if you listen to all of the chatter, they're saying, well, the rising interest rates don't really matter. The rising interest rates don't really matter. Look at this. The market keeps going up. And what's really happening in here is, like you said, we've got commercial real estate, which really never did a major correction and is at massive all-time highs. And understand that these commercial real estate products have been securitized. In other words, turned into a security and you're holding them in your IRA or your 401k or your pension plan, and you don't even realize it, right? But that bubble has already, it's got like a slower leak in it. I don't want to say a real slow leak. And in fact, today, the 10-year interest really spiked. So, make no mistake about it. According to the San Francisco Fed, a recent report by them, a key pattern, which is valuation on the bonds along with maturity on them, well, that has already breached, according to them, these are their words, not mine, a critical threshold. And when that piece has breached a critical threshold, 100% of the time, going back to 1950, because before that they didn't even have to think about this stuff, was a different kind of system. But 100% of the time, that has foretold a recession looming. And that's according to the Federal Reserve of San Francisco. So yeah, the markets have to keep going up. They're in melt-up mode because we've also been taught there's no place else to go. We're not taught to look at alternative investments or safe havens like physical gold and silver. God forbid, we don't want you there because we can't make money off of you. We can't transfer risk to you. We can't use the equity in your accounts, which is a lot of what's happening right now. It's called hypothecation and rehypothecation. We can't use the equity in your accounts that you hold in street name. Check with your broker. If they're in street name, then the
You're referring
bank
to
has,
stock certificates of stocks that people believe they own, right?
yes, and ETFs and mutual funds and all of those different products that you hold at your brokerage account, they're held in street name, which means you're a beneficial owner, but so is whoever sold you that. Whatever bank or Wall Street or insurance company or whatever, they're also a beneficial owner, and they get to use your equity and borrow, and then they can do whatever they want with it. So they've got to keep you in it. And there's really, if the bond bubble is bursting, and the real key about that is derivatives, then where else is there to go inside of Wall Street? It's the stock market. But in 2013, Venezuela had the best performing stock market in the world, and they were entering hyperinflation.
You mentioned just a minute ago about the interest rate bottoming in the middle of 2016, and then
Yes.
the real estate valuation bubble being reinflated. I had a shudder, a little visceral shudder at that time, because I remember just before the 2008 near collapse, how flush the real estate market looked in 2006, 2007, and in fact, one of the principles, it seems counterintuitive until you really think about it, that when interest rates are driving down, it starts to percolate some interest in people going out and taking out new mortgages and that sort of thing. But when they start to go up, there's even another rush of people trying to get their deal done before the rates get too high. And yet another news story that just came out in the past week is about home buyers faltering. We had one just go out of business. Well, in our neighborhood, which had 32 empty lots, now 16 of those got built up by one particular builder in the last year and a half. And now that builder is bankrupt, out of business, despite the fact that they had 100% of the market and they were just building houses all over the place here. But nationwide, home builders are faltering. So if
what's interesting about that, because I'm in Phoenix and I'm driving around and there's all of this building. What the difference between they were doing this securitizing these instruments prior to 2008, but that has really, it's like a straight up hockey stick, right? So it's much more now. So I'm kind of surprised that builder didn't transfer that risk to quote unquote investors. It's really hard for me to call people that buy these products that they really have no clue about investors, because they're not. An investor actually does their due diligence and understands what they're buying. And these products, it's almost impossible to know what you're really buying, right? So, yeah, real estate, and not only that, but recent reports, who's carrying the real estate market is the, oh my gosh, first-time home buyer. The first-time home buyer, who's carrying the economy? 70% of it is the consumer. And most of the rest of it is the government, which means we have to pay for it in taxes. So it's primarily on our backs. And when those interest rates go up, well, your credit card interest rate goes up too, doesn't it? All that variable rate, and it takes more of your income to service the debt you've already accumulated, which kind of makes it challenging for some people to accumulate more debt, unless, of course, and this is why rising wages is so important to everybody, the government particularly, unless, of course, your income can be inflated upwards so that you can take on more debt. It's really a disgusting system that's really designed to have you be a slave, but when the consumer sputters like they are, because it costs more to service the debt that you already have, you've got a problem, because the incomes are not keeping pace with it. Even though Amazon is now paying all of their employees $15 an hour, which at a normal 40-hour work week comes out to about $31,600, I believe, and I'm not really sure, but I think that's pretty close to the poverty level.
Yeah, and you mentioned earlier the inflation effect of the lessening value of the dollar on apparent wages that people take home when their buying power is really not increasing. Two glaring examples that the government, that's very insidious about that as far as stealth taxes. One is AMT and the other is FICA. On AMT, as your numeric, you call it nominal confusion. As your nominal salary increases, you become subject to higher and higher portion of your wages being taken for alternative minimum tax, which was initially only supposed, when it was put in the 70s, to tax the loophole hungry top 1%, the richest of the rich, and now it's like more than half of the middle class are subject to AMT. But on the flip side, FICA, as you earn more and more, takes a greater and greater portion because of your income as well. So it's very it's like they got you coming and going on that one.
Exactly, and and now we're looking at tax reform part 2, where they're actually talking about adjusting gains for inflation. Well, who does that really help? That helps the wealthy. Those that have their investments in these fiat products. Is it going to help you or me? I mean, the normal guy on the street? We'll see. Probably not.
Doesn't necessarily help earners and savers and pensioners. Back
No,
to
it does not.
the headline of just before the crash, the patterns to watch out for. You did mention the San Francisco Fed report about a key valuation level being breached that in the past has 100% predicted the onset of a downturn. What other key pattern shifts are you seeing?
Wow. Well, there are actually a lot, but what I also, in that report, I was talking more about the patterns that a normal person could recognize. Because most people they'll say it in the San Francisco Fed report, because who reads that except for nerds like me, right? So they'll tell you how great things are. But for the normal person, use your ears. Anytime you hear, this time is different. Okay, it never is. But this time is different is a key pattern that the normal person can hear. Valuations don't matter. Right? So we have all of these unicorns, corporations whose stocks, their IPOs, and their stocks are doing better than some more traditional companies. But the difference is these companies don't have any earnings, but they have these ginormous valuations. So you want to look for the valuations, or you want to listen or read, whatever, but you want to hear that the valuations don't matter anymore. This time is different. The valuations don't matter anymore. And then you also want to look at what the insiders are doing. And insiders have been selling out in droves. And insiders are, boards of directors, CEOs, CFOs. So the guys that are at the absolute top of these corporations. Because if the earnings and everything is so great, why are they selling the stock? So that happens, all of those things, just the auditory, this time is different, valuations don't matter, insiders getting out. Those three things alone tell you that we are somewhere near a crash.
How about, I got one more to maybe add to your list, and that is the idea of sort of the mega elite being caught in fraud. If they're doing so well, you'd think that they could do it honestly. We had Elon Musk just recently, fined huge sums of money. We have J.P. Morgan having been fined huge sums of money for price fixing, that sort of thing. It's like when the firms or the individuals who are doing the best of the best of the best, the top 1% of the 1%, are being caught with their hands in the cookie jar. That seems to be indicating to the common person that greed is just getting out of hand.
Well, it is the division between the haves and the have-nots, that income inequality piece, because what's really happened since we went on a pure fiat system is that, up until that point, as people were more productive in their work, their salaries increased accordingly. But once we hit, I think, the early 80s, somewhere in there, well, then productivity kept going up, but the salaries started to diverge.
And the buying power even more, yeah.
Oh, it's a triple whammy. They've got the normal person just coming and going and every other way because we don't understand that they're doing it. And they knew that when they set up the system. They knew that inflation, who understands inflation? It creates nominal confusion. So, hey, I had a $20 bill 10 years ago. I've got a $20 bill today. They are nominally identical, but what one buys 20 years ago and what one buys today, vastly different. So, and the other thing, just based on that statement that I would point out, Dunnigan, is this is what we know about. Imagine what we don't know about.
Right.
I guarantee you that's going to be a lot more than what we do know about. So when they get caught, and that's a really good point too, because they have made the banks and Wall Street, the derivatives, which are just big bets based on the price action of the underlying, and that market is huge. Nobody really knows quite how big it is because it's opaque, but it's much bigger than it was in 2008. And now they are completely infiltrated throughout mutual funds as well as central bank balance sheets and bank balance sheets. So when this market implodes the next time, or when interest rates breach a certain level, and I have not been able to figure out what that level is, I'm guessing somewhere north of 4%, that will be an explosion that they will not have the ability to hide. And if your wealth is in that system, it's not getting out because they're all insolvent.
I just thought of one more example of that, and that you mentioned we talked about sort of these fraud on the parts of the ultra elite, and you talked about the obfuscation or the impossible complexities of these derivative products, that sort of thing. Another one is, if you look at our buying power has been decreasing because of the general falsehood of government statistics about, like, for example, true inflation, cost of living. One of the biggest components of cost of living for more and more people. In fact, we have a good friend and neighbor who retired 3 months ago and now had to go back to work part-time just to be able to get back off of COBRA and onto medical. So now he was working 5 days a week away from his family. Now he's got to go back to work half-time, 2.5 days a week, in order to get medical costs. So medical costs alone are becoming sort of the tick that's going to eat the host here. But even if you drill into that, we've done an interview with Dr. Jane Nielsen, MD, on it's called "Robbing Us Blind: The Modern Medical System Has Us Right Where They Want Us." And he looked inside the system and said doctors are not getting rich. In fact, there's fewer doctors every year entering medical school. Nurses are not getting rich. The patients are not benefiting with better health outcomes, but the hospital administrators, the big pharma drug companies, and the insurance companies are the ones reaping all the profits. So even if you just take that one case study of a big contributor to people's cost of living increase that's not being admitted by official government statistics. So,
and you can put education in
Yep,
that.
absolutely.
You can put and when you look at really what's been happening inside of the medical system has been a massive consolidation, right? So the power has shifted where it used to be primarily the doctors that were in control. Now it's really the insurance companies that are in control. And insurance companies are kind of quasi-governmental. So, there are so many hidden costs. Your cost of food. No, inflation's going to be contained. Well, inflation is in the stock market. That's what all that hyperinflation went. That's your melt up. They can't let that drop because when it flows out into the general public, it becomes obvious and then confidence is lost. And that's what's holding this together. Is really still the confidence in the public that the dollar has value in this country. But wherever you are, whatever fiat that is, the yen still has value. Are you kidding me? Japan, and all the extraordinary policies that they've done, they own most of the stock market.
That's right.
I mean, please, so things are doing so well, but we're running trillion-dollar deficits, and we have to buy that debt ourselves because there's not enough buyers of the debt. Oh, please, things are really going well for who? Right? So, yes, they hide the costs, but we have to pay it every day. We know the truth, but we still kind of get confused about it and deny it. Medical costs have certainly gone up more than 2% a year.
Oh my gosh. It's there's another thing that makes it difficult for the ordinary person, and that is you can know in your gut and in your heart and in your ears and your eyes. You say, "Yep, my gut is telling me this is all smoke and mirrors, and this can't be right. This can't be solid. This can't have a solid foundation." And yet, who wants to be the first one to leave the casino? Because there's fortunes being made in there, and people are afraid. Yeah. So you're saying you certainly don't want to be fighting to be the last one to leave the casino. That's for sure. Did
you know that in my youth, I used to deal blackjack?
Yeah, you mentioned that in a previous interview.
Right. So you brought that up, but what a lesson, really, honestly, that was, because I would see people come in and unfortunately lose their homes because they were addicted to gambling, and there's financial psychology. Governments and central banks spend a fortune on getting the absolute most brilliant minds in psychology so that they spin things so that, there's your perception management, that we move forward. And you're absolutely right. Hey, the market's going up. They have this concept that they're going to know, bam, 1 second before. But the insiders that are selling out, they know they're not going to know 1 second before. I know I'm not going to know 1 second before, and I pay attention to this stuff constantly. But I get how challenging it could be, because what we're hearing is how great things are. And so we deny our own experience, even though, it creates that cognizant dissonance, and you go, no, your gut's telling you this isn't right. Well, it works until it doesn't. And if you're going to stay in these fiat markets, then I can only encourage those that make that choice to be properly diversified with something that is completely outside of the system in the physical gold and silver arena. Now, you're in preppers, so I'm a prepper. I've been prepping for a while. Food, water, energy, security, community, barterability, wealth preservation. These are things that we need no matter what is happening in the economy, whether it's good, whether it's bad. These are things that we all need. So if you get prepared with them, then whenever that outcome, whenever it shifts, whenever that derivative bubble has a big enough hole in it, or the bond market bubble has a big enough hole in it to be obvious to everybody, it's too late to get prepared. So believe your gut. Trust your gut. Because, yeah, people are all the time going, no, it just doesn't feel right. There's something going on. But, hey, look at the stock market. But the stock market originally was a reflection on the economy, because a company would borrow money or raise equity so they could build a factory and buy more property and hire more workers, et
Grow their
cetera, et
business.
cetera.
Yeah.
Correct. But these days, that's not what it's about at all. It's about trading and bank profits and corporate profits. It's about profits. It's not about economic expansion.
Two more things you just made me think about in what you were saying was, as far as not being the last one to leave the casino, if people go to our website, reluctantpreppers.com, they'll see in our merchandise section we have a T-shirt that says, "I'd rather be 7 years early than 1 day late," and that's
Love
available.
that.
The other one was when you mentioned our gut is telling us, our gut is screaming to us, things are not right. I have a bad feeling about this. I mean, quoting you from about 6 months ago, something nasty this way comes.
Oh, absolutely.
But we're being told by the powers that be, no, don't look over there. Everything's fine. Look at the stock market. Having come from some healthy family training in the past, realizing that this is what happens in dysfunctional families, in toxic families, is you're taught as a child, don't trust your gut, don't trust your intuition, don't trust what you know, what you see, just trust what I'm telling you. Watch my words, not my actions. That's extremely unhealthy, and people know that.
Right. And, and it's funny because I probably said this too, but my daddy, who was a great man, so don't get me wrong on this, I adore him, but he always used to say, do what I say and not what I do. And I always used to say back, Daddy, that does not make any sense to me. So you're right. That is a function. Look, every family's function is dysfunctional. It's just a matter of degrees, let's face it. But, having said that, we have to think for ourselves. If you were alive when we transitioned from a money standard to the fiat standard, so back in the 60s and 70s, I mean, I was a teenager then. There was this energy that was surrounding everything. And it was an air of change. And yes, there were a lot of protests and there were a lot of things that were going on to distract you. But what was really changing was the financial system was changing. I didn't know that yet, but I knew there was a sense of change. And I feel that same energy today. The only thing that gives us hope, or gives me really hope, because the system has to reset. It's not something that can be stopped. It's way, way too late for that. But if enough people understand what's happening, then they're not going to be able to shift us just to their benefit. That on the other side of this, we can have a more fair monetary system. Because I think what people really don't, it's been trained out of us, but the whole reason why we had money to begin with was to be fairly paid for our labor. So when we were on the gold standard, it takes labor and energy to pull gold and silver out of the ground. So you had labor for labor. That's fair. But that has morphed. And the goal was to have that labor. If I didn't need to use it today, I didn't need to use that money today, I wanted to save it for future use. Well, I always want to be fairly paid for my labor. So gold supports that. But in the fiat system, it's just the opposite. You are actually at this moment paying for government debt that you may or may not agree with or want or what have you, but they're dictating it because it's so easy to spend other people's money. And the most important function of fiat is inflation, which guarantees that you will not be fairly paid for your labor. And think about this. Okay, Amazon said $15 an hour. All right, well, how long are you going to work for that $15 an hour? Because if the central banks hit their target, that means that $15 an hour is losing 2% of its value every year. So if you stay at $15 an hour, you're not really getting paid what you originally were. And if they can switch us into the next system, it'll be worse. But this system doesn't work anymore. So we have to reset the system. And, they want more control. They want to transition us from, and think about this. I mean, it doesn't really work like this anymore, but governments are supposed to represent the individual. They're supposed to, in theory. When we shift to this new system, it's going to be controlled by bankers. And if you want to know how they think about individuals and the value of those individuals, look at Greece, which is supposed to be a success. The population has had God knows how many austerity programs. The country is just devastated.
Yep, we just came back from a road trip for our channel, both to Greece and Italy, talking with people there about the impacts on them. So we'll be producing that soon. And it was really an eye-opening experience to see what's happened to those economies with the practices that have been going on there and their experience from being part of the Eurozone and so on.
Exactly. And that was all part of the plan. And we make the assumption here in America that they understand this stuff so much better than we do, and they don't. They're as clueless about it, the normal people on the street in Italy and Greece and anywhere else. They're as clueless about the fiat system as Americans are. At least in my travels, that was definitely what I experienced. And they don't understand inflation, any better. And, really what we're also seeing in here now, especially with emerging markets, with the dollar strength and all of this kind of garbage, is the current system of one currency being pegged to another currency is breaking down. But that actually started in 2015 with the Swiss surprise. So, no pegging. We're talking about the Eurozone in particular, but this is frankly true. So you had all of these countries pegging their economies together, but no two economies are the same. And we certainly know Greece's economy is not the same as Germany's economy. And yet they were allowed to borrow money as if it was.
That's right.
That was an accident. It is. Still is. Italy's going through it. Whatever. Greece went through it. And that is definitely an accident waiting to happen.
Well, it's kind of like the subprime mortgage thing all over again. You eventually reach the bottom of the food chain and things start blowing up. That's one of those pattern shifts you were talking about, is when you exploit it all the way to the edges, which have no business being in the first place.
Exactly. And you mentioned about the real estate fraud, people filling out more. Well, it isn't just that, but also the terms of those agreements have been getting more and more lax. So there's a lot of resurgence from the products that created the crisis. There's a lot of resurgence in that these days, and people's ability to take on more debt. And hey, they just changed the way they calculated your credit score, and those at the bottom saw an average jump, I think, of 30 points, which could be very well the difference between whether or not they can get a loan that they can't afford, or they can't get a loan that they can't afford.
One more false official statistic, huh? How to keep juicing the system.
Exactly.
Oh my gosh.
But ultimately, these debts have to be repaid. Either they're defaulted on, or they're paid off, or they're rolled over. And we cannot forget that the IBOR's interbank offer rate on which all of this debt is based is going away by the end of 2021. And so any debt that comes due after that date will have to be reset. They call it restructured. And that's never historically been done before. So even going back to the banks that are, getting caught doing this illegal thing and that illegal thing, imagine they've got to pull this thing off to perfection. If they got caught, they didn't do it to perfection, did they? They got caught. Right? I don't think they can pull it off to perfection. They don't actually even think they can do it. So this is kind of like the last hurrah. It's not a shocker that we're seeing new highs in these stock markets. That's what the change in the tax law was all about. And, we've got record stock buybacks while you've got record insiders selling their stocks at the same time, covers that up. You can't see it. And the other thing that's been happening is the rise of the passives. So like ETFs are passive investments. So they're just based upon a computer program. So when certain levels are breached, they just do an automatic result, whatever they're going to do next, whatever they're programmed to do. And because ETFs have to reset their values at the end of every day, all the liquidity has gone to the end of the day, the last half hour of trading. There's no liquidity, according to the IMF and a bunch of others, there's no liquidity in the rest of the day. That's why JP Morgan's top quant expects there to be a lot more flash crashes. Well, yeah, there's no liquidity. And social unrest like we haven't seen in 50 years. Let's see, that takes us back to the last transition. So all of these, there's lots of patterns that you see coming up that are standard. You see them in prior to every single crash just before. The easy ones for people just to hear, when you hear especially valuations don't matter anymore, they always matter. You can maybe elongate the economic cycle, but you are not Mother Nature. You cannot change the laws of economics. And this time is different. And even the San Francisco Fed said, well, this may seem, and this is not a quote, I don't have it in front of me, but basically they said, it may seem like it's different this time, but evidence shows it's not. No, it's not different. This time is not different. Overvaluations are overvaluations, and everything always goes from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation. So gold and silver, severely undervalued because it's real money. They don't want you in real money. Their products, severely overvalued. Which do you want?
Yeah, we were talking to another expert on the show, and they were talking about ways to reclaim your privacy. You mentioned earlier another benefit to those in control are keeping you in the system. Not only allows them to play games with your wealth on the backside and leave you vulnerable because you're really not a full owner of that, but it also takes away that trend towards a cashless society or a precious metalless society where you don't really have a way of holding on to your value. Really loses your privacy then, because every move is tracked, and it can be not only tracked but controlled. You can lose the privileges to do certain things. So one of the recommendations from one of our guests was just use cash as much as you can for multiple reasons. For the simplest of which is that it flies in the face of arguments that, oh, well, we don't need cash anymore because nobody's using it. It's like, well, if enough people are using it for enough things, that may be able to counter that argument for some time. But intrinsically, it preserves a measure of your privacy, and you still have something to hold on to. But beyond cash, since the fiat system itself is subject to its own inherent risks, let's get us back to what are the remedies for people. And you outlined that earlier, and you have in each of our interviews, as far as you mentioned food and water and wealth preservation and barterability. So why specifically, and I was just thinking of Gregory Mannarino when you were talking earlier. He said, he keeps pulling profits out of the casino to invest in hard assets like gold and silver. Right. So why do you see that, just for those people who aren't already versed in this, why gold and silver offer an extreme contrast, a remedy, sort of the medicine that gets you out of this illness? Yeah, right.
Right, a security. Well, it's really simple. It is the most private of all assets, but it is a simple fact, and this is just, ABC, it's not rocket science. There is always demand for physical gold and silver, whether it's in manufacturing or medicine or the financial system or art or jewelry or food even. So when you have, in a true market economy, when you have more demand than supply, prices go up, okay? In a fiat system, well, that's not actually true. The more they create, then the prices go up because the value goes down. So gold and silver is the absolute perfect diversifier because it's actually real money with full economic demand. Whereas these fiat products, whether they're dollars or they're stocks or they're ETFs or things like that, stocks are a little different if you have the security outside of the system and you take delivery of the certificate. But those are all created from fiat. When they pay you back or pay you out, it's done in fiat. So if the value of the fiat goes away, then what's the value of those things? You know, people will say, well, you can't eat gold. You're going to eat a dollar bill?
Yeah.
You're going to eat the digits on your computer screen?
Right.
Yeah, I got a better chance of eating gold than you have of eating those digits on your computer screen.
And one thing you didn't mention, although I think you had earlier, is that these products are so complex they become incomprehensible. And if something is incomprehensible, I remember my father-in-law said this when I was trying to explain to him way back before the .com collapse on why people are into, why he should consider, and I was giving him bad advice at the time, he should consider getting into options because you can make so much more so much faster that way. And I tried to explain it to him. He said, I just don't understand the way you've explained it. He said, and if I can't understand it, I don't think I'm going to get into it. And that's very wise counsel from someone who's had some real hard knocks in life. But so back to you, when people say you can't eat gold, but maybe you can understand gold though.
You can, because it's real, it's physical. You hold it in your hand and there's lots of uses to it. But I love that commercial that they have, I think it's TD Ameritrade, and it's the guy playing, and he says, well, options are really simple. Why don't you do options? Well, they're just too complicated. And then the guy is playing pool and he goes, oh, you want to play pool? Oh, no, it's just too complicated. So what they're trying to tell you is options are so simple. It's just like hitting a little ball with a stick, and they're not. They actually say if we make things really complicated, nobody questions us, right? So you don't question it. You have no clue about what you're doing. And I love it when people will say to me, well, I don't really understand gold. Gold and silver, right? Physical. It's really simple. You hold it in your possession and it's actually real money. If you need to liquidate it 100% of the time over 5,000 years, you could always liquidate it for any currency, any good, or any service. With the fiat money, there are over 4,800 that don't exist. You are not converting them into any of them. You can't buy any gold, you can't buy any goods, you can't buy any service with it. Venezuela is a prime example. So yes, you need to have, that's the true diversifier, and it's also the true safe haven. Because the other thing that people don't realize is that is actually how a reset is performed. By taking the fiat, whatever that currency is, and revaluing it against gold, which is real money. And so, I personally, I bought more today. I just keep accumulating both gold, and I did both gold and silver, and I did the collectibles, and I did some barterable gold, and I did some barterable silver. That's what I did for myself today. And I say thank you very much, because these prices are just ridiculously stupid. And it isn't even that Wall Street has to make that happen, because it doesn't. I don't trust Wall Street at all. I worked on it. I understand what it's about. But that's how the governments and the central banks reset the system, is against gold. So I don't care what it does today, tomorrow. I care what it does in the reset, and then how I can utilize it during that period of time. To pay off a mortgage, or to buy an income-producing asset, or to protect. I don't have any, well, I shouldn't say any, because it's still our tool of barter, but I only hold a minimum amount of fiat. I am not in the stock market. I do not care if I'm missing this run. I took, the money that I put into the markets today, I did not put it into the fiat markets. I put it into the physical gold and silver markets.
Well, Lynette, this has been a very interesting visit as always, and I think we've given our viewers a lot to think about. And if there's a way that you could send me a link to that San Francisco Fed report that you mentioned, that'd be really valuable to people. I'd like to include that if we could.
Absolutely, and that was I just did that yesterday on the on our YouTube channel. So yes, we'll absolutely send you the links to it. And I'm in the process right now. I haven't finished reading it, but the what is it? The from the IMF, the global system, how we're doing, where we're at. So I just started reading it this morning. I'm not done yet, but I'll probably be doing something on that pretty quick, because they'll say this and they'll do that.
Well, we've been talking with Lynnette Zang. She is the Chief Market Analyst at ITM Trading. Today is Wednesday, October 3rd, 2018. Lynnette, as always, thank you so much for joining us here on Reluctant Preppers.
Oh, Dunnigan, it really is my pleasure. Can I clarify something,
Absolutely.
though, that I have really recently discovered? And it is really what makes ITM different, aside from how keenly we are invested in making sure that everybody is educated so they can make those choices. But I have found that that people don't understand that when you're working with ITM trading, this is a long-term relationship through the trend cycle. The strategy that I developed since studying currencies in '87 is based upon all of those repeatable patterns. And yes, that's what the work is all about, to help you learn. But our intention, we've been around since '95, our intention is to work with you through the cycle so that you know when, where, and how to use your physical metals, not just throw you in it and say good luck. Mm-hmm. So this is not a short-term thing when you work with ITM and you're executing the strategy. This is definitely a long-term relationship. And I thank you for letting me clarify that.
In business, they like to clarify whether you're focusing on the transaction or the relationship. And it's a lot more value. There's a lot more synergies when you focus on the relationship, just not just on the transaction. So,
exactly.
And as part of our relationship, we'll have you back on a little over a month from now. I'd love to hear what you learned from the International Monetary Fund report, and also we'll be one step closer to wherever these pattern shifts are leading us, and be able to see a little bit more clearly into the fog. But Lynette, I almost forgot to ask you about your urban farming update. We can't let you go without letting us know what's new in your backyard.
Oh my gosh. Well, actually, I have a ton of hibiscus that's coming into bloom right now, and that is so rich in vitamin C. So my farm is doing really well going into my fall planting season, but we are planting like crazy. And finally, my cayuga ducks, these are all black ducks. They are gorgeous, look like an oil slick with all the colors when they're in the sun. But they are giving me like I have 4 of them. They're giving me like 4 or 5 eggs a day, and they're like huge. They're just wonderful. I love those ducks.
Are these golden eggs?
I wish. I actually have some. Meg, can you hand me the eggs? I don't know if I have the cayuga duck, but I actually brought in some eggs that I was going to share with some of my coworkers today, because I like to share. These are not any duck eggs, because I gave them all to Ryan. But I don't know. Can you see them?
Oh, yes. Yeah, those are beautiful.
Okay. Aren't they beautiful?
Yes. It reminds me, our daughter, when she's not overseas, lives in the Phoenix area, and there's only 4 colors you can paint your houses in her neighborhood by the HOA standards, and they're all various shades of taupe and beige and sand and everything. And I looked at the set of colors there. It's just beautiful. There they are.
I know. I mean, these are my little, I don't know whether these are from the Easter egger or the Arquanas, but, green and blue, these are my favorite. Well, lovely. I don't know. I really am loving the cayuga ducks. And when your daughter gets back, she should come over to the farm. And when you come down to visit her, you should too.
Sounds good. Let's plan on it.
So yeah, you can go, if it's warm enough, you can go swimming with the fish. Which is definitely
floating forests.
Absolutely. Floating food forests.
Cool. Thank you so much, Lynette.
It's going very well. Thank you for asking.
Blessings.
You too.